We discussed the pros and cons of investing in small cap funds. Let's examine the small cap fund returns over the past 3 years. Taking a closer look at the middle of the range HDFC small cap fund, just for an illustration, this has generated an annualized return of 38%. The category average itself is close to 35%. An investment of rupees 1 lakh 3 years ago would now be worth 2.63 lakhs. Suppose you had invested for 10 years, an initial investment of 1 lakh would have now grown to 5.19 lakhs, resulting in a 5-fold return. That's an annualized return of 18%. Quant small cap has generated a 65% return per year, but I'll keep that out of the discussion, considering that as an outlier, and this needs a very detailed analysis. Over the course of a decade, the returns on small cap funds are remarkable, with a category average of 19% annualized. The compounding effect of 19% over a 10-year period is phenomenal. Unfortunately, not many investors have been able to enjoy these returns due to fear. It is crucial to examine the risks involved and understand what creates fear before we consider these high returns. This chart highlights the worst phases of the fund and what an investor should be prepared for. In March 2020, the fund had lost 38% of its value in just 1 month, indicating the volatility associated with small caps. If we consider a longer time frame, the fund had lost 43% in a year. It is important to note that the small cap funds can experience significant fluctuations. Investors should be prepared to see their investments losing value up to 50% in the interim. The question is, are you prepared to accept such a significant loss? Although many individuals claim to be long-term investors, a loss of 50% with no clear indication on when the market will recover can be unbearable. This is why small cap returns may seem appealing on paper, but the high volatility can make it difficult for many investors to stomach it. The best time to invest in small cap is when historical returns are low or even negative. And the best way to invest in small cap is through SIP over really long term, overcoming the temptation to monitor it or churn it. Volatility is the stock price moving up and down. It can be unsettling for investors, causing them to make irrational decisions. If the market remains a constant, then we make no return. It is only the volatility that creates the return. The fluctuation in stock prices enables investors to buy them at a lower price, thus generating a potential to profit. Volatility is like surgery. If there is no pain, then there is no gain. While volatility can be painful, it is necessary for investors to accept it as part of the investment process. We are almost in the green zone and investors have a favorable odd. The question is whether to invest now or wait for more correction. It is difficult to predict the bottom of a market, but when the odds are in our favor, we must act. It is important to align our investing horizon and pain tolerance with these risks. If the market falls further, investing through SIP can lower the purchase cost. Rupee cost averaging reduces the impact of volatility. Will the market go up? There is a famous saying that the market belongs to the believers. You have to overcome fear to make big wealth. And if you are still in fear, multi-asset and hybrid funds may be a better fit for your lower risk profile. How would Warren Buffett invest if he were to start all over again?
I were getting out of school today and I had $10,000 to invest, I probably would focus on smaller companies because I would be working with smaller sums and there's more chance that something is overlooked in that arena. That's the only way to do it. I mean, you have to buy businesses, little pieces of businesses called stocks. Buy them at attractive prices. That advice will be the same 100 years from now, and that's what it's all about.
Smaller companies are hidden away, so higher is the chance of finding pricing inefficiency. If a fund manager knows how to value a business and has unique insights, he might be able to outperform the market. Small caps provide the highest chance of wealth creation, but one needs to weigh the risk and be ready for a topsy-turvy ride. If you like this video, please do like it and share it with your friends. Please consider subscribing to this channel. Thank you.